Up only.
10, 9, ignition sequence start. 6, 5, 4, 3, 2, 1, 0. All engine running. Liftoff. We have a liftoff.
Up only.
Hello and welcome to Up Only TV. My name is Ledger. You know who's on today. We've got Kobe and the one and only Mark Cuban. We're going to get to him in just a second. Before we do, let me say thank you to our partner, Blockfolio. Go to uponly.tv/Blockfolio. Trade with Blockfolio seamlessly from one asset to the other. It is a great trading experience. All you have to do is go to uponly.tv/Blockfolio. Download it today. Trade with zero fees. It is an outstanding experience. Let's get to the meat of the show. Kobe, hello.
Hello, mate. You're so stressed out here. Ledger's entire machine just died as Mark joined the call. So he's feeling pretty stressed. Mark...
Ledger, did you see the Easter egg I left you?
Was that you that brought that to me?
Yeah, you know, I had to make it interesting, right? I couldn't just let it be like any other show. I had to change things up some.
Well, I appreciate it. It's it couldn't have gone any worse just there. Literally, I heard the beep saying that you joined Zoom, and then my computer completely stopped across the board.
just remember, Ledger, there's no such thing as a coincidence.
That's right. Welcome to the show.
Well, yeah, Mark, multi-billionaire entrepreneur, celebrity television personality, owner of the Mavs, king of the Shark Tank, and one-time cameo on Grace and Frankie season 6.
Yeah, fun.
And now, guest on Up Only TV. Welcome, mate. How's your day going?
Another day in paradise, bro. Just happy to be.
We've got so much stuff that we want to talk to you about, and we have a bunch of people in chat that are spamming things already. But I'd love to get straight into it. Like, you've gone pretty deep on crypto over the last year or so, maybe last 2 years. You know, you're like a NFT collector. You've been participating in DeFi. I heard you're even learning Solidity.
Yeah.
What was the inspiration behind this deep dive?
Well, first, I mean, my first company way back when, I wrote software and I did database applications and distributed database applications and did systems integration. So, you know, I had a great database background. And so when blockchain started to happen, and I got familiar with it probably in 2012, but I was never sold on Bitcoin being a currency. And then fast forward, as Ethereum and smart contracts in particular started to happen, I started paying more attention. And then DeFi summer hit, and I said, okay, I got to dig in some. And then NFTs picked up some. So I'm like, okay, I'm going to start minting some NFTs so I can learn. And that led me to seeing the royalty standard, which led me to believe that, okay, this is a game changer, which led me to believe, okay, I got to learn this shit, which led me to believe, okay, let's look at Solidity and smart contracts and realize they're not very difficult. It's pretty straightforward and simple. And from there, it was just all about the business applications and opportunities. And that's why I really dove in. And so, I mean, I've been up to speed on it for a while, but I've been hardcore only for the last 3 or 4 months.
Yeah, that is good. One of the things that we got a lot of tweets about was a comment you made about Bitcoin way back when, and I looked into the actual quote, and it's actually a lot more balanced than it was is often re-reported as.
Wait, you saying the media took something out of context?
Never.
Yeah. Maybe it happens once or twice. And it was a lot about your doubt in Bitcoin as a currency and seeing it more as I think the actual quote said something like, if they start printing money like crazy, maybe it's got a chance of an inflation hedge or something. I think it was like 2013. How do you see this Bitcoin narrative now versus the Ethereum narrative? How do you see them going into the next few years?
So a couple things. Where people got mad at me and where I was at odds with the Bitcoin community is I never saw it as a currency. I saw it as a store of value, digital gold, right? And just a supply and demand issue. And obviously, you know, the algorithmic scarcity is built just to define supply. And the more demand you can build for it, the higher the price is going to go. And that's not a bad thing, but it was never really designed to be a currency. And you saw that in 2017 with all the forks and all the arguments about block size and everything. And so I was fine with it as a store value. And really just, to me, it was just a question of when it started becoming more commonplace for people to buy it, because that's what was going to lead to a significant increase in price. And that's what happened. And then with Ethereum, I really, with the ICO blow up and the ICO, balloon, it was interesting. And I actually lost some money at that time, just experimenting with some things, but nothing horrible. But I learned some there, but it really wasn't until this summer when smart contracts really started to evolve and become more available that things really took off. And that's, like I said before, that's where I dug in. And to me, in terms of how it all plays out, Bitcoin's great as a platform, and it's accepted now. It's an alternative asset. It's going to replace gold in the portfolios of a lot of people. And that hopefully will push the price up as long as the whales continue to hodl. But that's a different type of platform, and its utility really only happens when you wrap it, at least as of now.
I've thought that the replace gold concept has really started to click because you start to ask people, if you're under 30 or if you're under 40, you say, hey, you want an ounce of gold or the equivalent in Bitcoin? The answer is pretty obvious for most people. So there's this generational effect. What do you actually think is a realistic timeline for that to occur? Like, do you think it's a market cycle thing? So like this market cycle, maybe it can get to 25% of gold, or do you think it's just going to be all at once at some point and all of a sudden Bitcoin's bigger?
It's going to be gradual. So you're starting to see these ETFs pop up and ways for people to buy it. And so, it's too difficult still to get money into a wallet just to buy Bitcoin. So you need to have somebody that you can work with that is going to hold it for you, right? Because most people are going to be terrified of having, that Bitcoin in their own custody, and so until that's simple, people are going to want to buy it through traditional means, through their broker or Robinhood, even, Coinbase to a lesser extent. But just that process of going through the Know Your Customer AML stuff and connecting to your bank, it's still too much of a hassle right now. I mean, it's just easier for people to deal with a stock brokerage. But as there's more and more opportunity for people to buy from the people they already have their savings with and their retirements with, then you're going to see it chip away at gold, because the reality is gold is sold off a narrative just like Bitcoin is, and it's really built on trust. Do you trust gold or do you trust Bitcoin? And like you said, younger generations, are going to trust gold. I mean, I'm going to trust Bitcoin rather, because gold has no utility in and of itself. What's gold good for? Yeah, it's good for nothing.
Yeah, for sure.
Yeah, gold is dead. I got to track back. You lost money on 2017 ICOs. I love this. Like, you got to tell us what shitcoins you were buying, man.
No, I'm not doing it. Normally I'd say I don't want to embarrass other people, but in this case, I don't want to embarrass myself. And so out of my mind. But yeah, it was not fun.
Is there like a billionaire WhatsApp group where you're like, bro, check out this new ICO, Dentacoin. It's the coin for dentists. It's going to go to the moon, and you like send each other the shit.
Yeah, no, not really like a Telegram or Discord, but there's like a bunch of us on Snaps, and we just do streaks all day long.
That's
so
amazing.
Every night I send Bill Gates the streaks, and Warren Buffett gets my little S for streaks. And and then Warren Buffett always likes to show his toes and stuff like that. Chamath, is trying to get in the group, but Bill Gates won't let him in. So it's just like.
So you're saying there's like a secret billionaire Snapchat group that you're unveiling to the world?
Pretty much, yeah. So it's all the dudes, because there's all this competition to get into the New World Order and the Trilateral Commission, and they won't let normal people in, right? You got to be. So we decided to have our own alternative, and that was just the Snap group.
Looking forward to the Twitter account Buffett's Toes.
Yeah, I can't wait for the fake tokenized membership on Uniswap.
So everybody knows that you've come around in terms of crypto as a whole, but then you got excited with DeFi and with NFTs. One of my favorite NFT examples is one that you gave on an interview where you talked about, hey, why can't Mavs tickets in the future be NFTs? And the reason I love it is because it's totally vertical. You have control of that. So it's not a government, red tape type of issue. You have control, and it's a use case outside of the art world that is a win-win for customers and owners. Can you talk about how far you think NFTs can go?
Yeah, I mean, look, the whole collectible thing is just proof of concept for smart contracts. Period, end of story. Because the real money and the real opportunity is going to come from business applications. Things like DocuSign, forget about it. It's going to change, right? Insurance applications. I'll give you the perfect example. So there's a company, and I forget their name, that they have an insurance application that always just checks out an oracle for the National Weather Service for temperature and precipitation. So for the Mavericks, we had some crazy weather in Dallas a little over a month ago where it was like below zero and we had a few inches of snow and everything closed. So I could have bought some insurance on a smart contract that said, if the temperature in Dallas goes below zero and we get more than 2 inches of precipitation, then pay me, how much does it cost? And you pay me this amount. Well, that's completely different than traditional insurance because it's all driven by a smart contract. It just naturally checks every 30 minutes the National Weather Service. And if it clicks and it's below zero and more than 2 inches of snow, it just pays right to my wallet. That's the type of application you're going to see more and more of. And then you're starting to look at, like we were talking about optimism and the way they do things. Imagine if for health insurance, for claims against your insurance, instead of going through the disaster of trying to get your insurance company to try to pay your claim just so you can get your money back, right, or get, stay alive, if there were a bunch of validators out there with a set of rules. And I think optimism's kind of approach is to look for fraud and for validators who don't do it the right way, right? So imagine if you had a bunch of validators that on an anonymous basis, you don't know who the person is, but just looked at the claim and authorized it or didn't authorize it. And if you got 80% of the people authorizing it, then your claim was approved and it happened in 6 minutes. Those are the types of applications that are just going to blow up. And tickets is just one more of them. Yeah. So, with tickets and NFTs, the beautiful part of it is it completely turns upside down the secondary market. So if somebody sells, they're a season ticket holder for the Mavs, or a broker gets a hold of some tickets and they go into StubHub and try to sell it, we don't see any of it. And it's actually a pain in the ass because of the way the brokers do it. They'll list tickets they don't even own, right? All that stops. All that goes away when you make it an NFT, and then we can unlock really cool stuff. We can check to see if it's in their wallet, to see if we want to download something in game, to make sure they're, they have it, to show that they're at the game. There's so many cool things that we can do. But like I said, the biggest and coolest stuff is going to happen in business and entertainment rather than arts and collectibles.
So you said that crypto now is like the early days of the internet, and with that vision you just described, it seems like the next 10 years is like super exciting for crypto. Like people should be focusing on learning the space now. What sort of infrastructure do you think is missing to enable that vision to sort of become a reality? Like what is preventing it today?
Well, there's not an efficient connectivity between all the exchanges, right? So you get a lot of variability. You get a lot of musical chairs where, there's liquidity in one place, then the liquidity's gone, and then you bounce to another place, and people try to game the system in a lot of respects. And you get rug pulls, and you get all kinds of games getting played that shouldn't happen if all those indexes were connected to, or all those dexes were connected together. And so there's not the efficient market principle in play. And that's a challenge because you can walk into you can have a token that right now is $30 and somebody sells and 3 minutes later it's $16. And it's not that can't happen in the stock market. It can, but it doesn't matter where you are or how you're trading. They have to show you the best price. So that's the type of thing that builds trust. And that's the type of thing that gets us to more usage. Other things is just simplifying user interfaces. Wallets aren't easy. And the fact that you need a wallet doesn't make it easy. That's what makes Top Shots and Nifty Gateway so strong. They take care of, they make it easy on the front end, even though they make it tough on the back end to get your money out. Most people, yeah, well, everybody's got, anybody who sold anything there, but it just, for most collectors, that's not a big deal that it's closed loop, but generally speaking, it reduces trust. And so we have to build up all these simplicity and trust issues in order for it to become more mainstream.
Have you been picking up drops on Nifty Gateway?
Have not.
Have not. I got the Too Much Lag drop. Shout out Too Much Lag. That was my favorite. Yeah, so I think that makes sense. Like, it feels like the user experience of crypto has improved like 100x in the last couple of years, especially since 2013, when every time you did anything, you were overwhelmed with a sense of fear, looking at the address to make sure that
right. No kidding.
But yeah, is there stuff happening behind the scenes that you're aware of that like people watching might not know about, might not be privy to?
There's cool stuff like I've done some stuff with Atomic Wallet and the people behind Atomic Wallet. I forget the company name, but they have something called TokenScript, and within the wallet, it's its own combination of JavaScript and XML and HTML, which means you can develop applications within a wallet, which I think is really, really cool. So that, by just downloading a wallet and being able to trigger the script that comes with Atomic Wallet in this case, and hopefully it'll go to other wallets, the application, rather than connecting to a website where all the application work is done, it could just travel with the wallet wherever it goes. And that I think is a big step forward. So yeah, there's a bunch of stuff, and obviously, all at all layers, there's a lot of stuff going on.
Yeah, so I think one piece of infrastructure that is needed for this vision to be realized is like someone sorting out the ETH gas fees in some way. Like it prices out it prices retail out. And it prices out, like the cost of minting like 5,000 NFTs is just extraordinary.
No, it's great. Yeah, but that's not really an infrastructure issue, right? That's more proof of work versus proof of stake or any other of the options, right? And it's almost like the early days of the internet where bandwidth was the big impediment. You couldn't stream. We had to stream at 16K audio, and you couldn't do video. It was crazy, but we knew at some point bandwidth would open up. And transactions per second is the equivalent of bandwidth. And so, go ahead.
I'd love to back up to that part of your career where you knew you were working on something that had real legs and that was innovative and that was going to be the future, and you absolutely knew the infrastructure sucked. How do you approach it from a business person or as an investor to get there for the future? Because if you price it in as if it's now, you end up in this big bubble territory because the value is not quite there yet, but you see the opportunities. How do you balance all of that?
Well, you give people something unique. So even if it was when it was 1995 and 1996, and you had to have a 56K modem, or you're in your office on the office internet feed, and you had to go through all these hassles. You had to have an ISP you had to connect to. You had to have the TCP/IP client you had to configure. You had to have a media player you had to configure, and you had to make it all work, and it didn't always work. But that was the only way you could listen to the Chicago Cubs game in your office. That was the only way that you could listen to music effectively, because literally they're not going to let you have your Walkman headphones on and you don't have a radio, or because everybody hears your radio, or you definitely don't have a TV. So we did this research way back when that said the PC was the primary media device on 97% of desktops. And so we knew that in office from 9 to 5, wherever you were, we were the only way to get any entertainment. And so that was our focus. And then you add to that, if we wanted to be able to do, if a company wanted to be able to do an all hands meeting, right? In the past, they literally, and this is in the 90s, would drag you out to a theater, and there'd be one place where they would do a satellite upload, and then they download it on satellite to everybody in real time,
Wow.
kind of like a TV station would. And we were like, no, you just let everybody sit at their desktop. And initially it was just audio, then it was video, then it was better video. So we knew we were still saving people money and giving them opportunities that they otherwise couldn't get. And then when the bandwidth would catch up, we knew it would be all different. Than when wireless hits, then we knew the game was over and we won. And so that's what we were buying time towards. But we weren't losing a ton of money. We're losing $1 million a quarter. And when we sold, we were cash flow break even. And so we found ways to do it.
Also from that time, I got to ask about this, because everyone always says, crypto grows in bubbles, or crypto is a bubble. Either it grows in bubbles or it is a bubble, or, depending on your bullish or bearish narrative. And Ledger pointed out before the call that you sold the absolute pico top of the tech stock market bubble. You sold it to Yahoo and then allegedly hedged your Yahoo stock as well at the absolute top. How do you? But also like tech, there was a huge bubble back then, but it also launched some of the most gigantic companies of today. So like a lot of things do grow through bubbles. How do you? In an environment where things are getting frothy and there's a lot of like bubble-like, balloon-like energy, how do you manage to stay sane and rationally think about longer term when everything is just going fucking crazy?
Well, you know what? You try to remember why you're doing what you're doing, right? We knew streaming was going to work whether we sold or not. It was just a question of us or them. And then when Yahoo bought us, when the market deflated, they freaked out and cared more about the stock price than what they were doing. And that fucked them up. But for now, right, if you look at Bitcoin, and here we are, just under $60,000, it really comes down to, and the uncertainty for Bitcoin is it comes down to what the whales will do. Because there's so much Bitcoin concentrated in so few wallets at the top that's the risk factor. And we don't know how much of that is lost and how much of that is held. How much is, effectively the equivalent of burned and lost wallets or whatever. And so that's the uncertainty. If the whales hodl, then everything's good. If they all decide to buy NFL and NBA and NHL and MLB teams at the same time, then all that changes. And so, it really just comes down to that. Now, even that, but what you have to know, that's just in terms of the current price. But what you have to know is what is the utility? And Bitcoin now has become a platform more than anything else. Ethereum's a better platform, but Bitcoin is, the store of value platform. And because you can wrap it and more bridges are coming along and there's, they're enhancing Lightning where they can, there's just going to be more and more utilization for, inter-country, international distribution and payment schemes.
How do you think things are going to change as these DeFi projects have, balance sheets and token value accrual? And I mean, it messes with regulators' heads, I'm sure. Like you're trying to blend protocols and utilities and things that look like securities. How do you think the regulators will play nice, or do you think the hammer is going to come down, especially for folks in the U.S.? How do you anticipate the regulatory environment will shift to the changing technology?
I think the only group that's going to have a lot of problems are the fractionalization people, like fractionalizing NFTs, because that's securitization, and that already has a mirror application with bonds and everything else, right? In terms of DeFi itself, the biggest challenge for regulators is just going to be fraud. Because it's a game of musical chairs, right? When you're paying in your own token and you're subsidizing liquidity on the other side of trades to make it look like everything's cool, and then you run out of money or no one's buying tokens anymore, and they pull the rug out, when the music stops, you're fucked. And so that's where I think there's going to be the biggest hassle, because there's going to be some people who lose money as more and more newbies come in thinking they're going to get, that 30% APY is going to pay 30% all day, every day. And they don't understand liquidity providers. And, you see situations where tokens bring in liquidity and it lasts a week, or it lasts 2 weeks because they buy that liquidity. So I think they'll deal with securitization first and fraud first. And then after that, they'll see what they find and go from there.
Yeah, I think a lot of the regulation that is upcoming will probably end up being quite bullish overall, because I spoke to a bunch of people who either know a guy who knows a guy who's like, this gigantic hedge fund or family office or even bank, they want to participate in DeFi. They see the yield is available, but if they step on the wrong side of the regulations, they're not going to get slapped on the wrist. They're going to get $1 billion fine. So they're just not jumping in because of that.
Bullshit, right? A lot of that's just buying time. So, so they have these things called structured products in the stock market world, right? And what a structured product is let's just say Twitter has a bond, whatever it's trading at, and there's some volatility in it. and they'll say that we'll guarantee you, and I've had this type of deal, I'll guarantee you 29%, but only for 1 month, right? So you have an APY of 29%, but it's only 1 month. And then the company selling it to me, the broker is selling it to me, will sell calls, sell puts. And the restrictors on it are if the price of Twitter goes above this or below that, right? And then it triggers the callback and they buy it back and you just made your 29% for 1 month. That's effectively what DeFi is. It's the exact same thing. But in order to do that, I have to sign 50 pages of paper just to be able to do that shit, right? Whereas with DeFi, you're your own bank and you work, whether it's an AMM, whatever it is, to figure it out yourself. Now, there'll be some people who get crushed and there'll be some, and you talk about regulation, and I made the same mistake too, where you go in and you're going to I'm going to test it out, right? I want to learn how it is, and I'm going to put in $500 worth of ETH, and you put in $500 worth of ETH, and you think you're just crushing it because you're not going to get too crazy. You're doing the 30% APY instead of the 300% APY, right? Because you think that's a little more legit, and then you go to hit confirm, and you realize too late that you just out of your $500, 120 went to gas fee, right? And you'd have to stake it or lock it up or pull it for whatever for 16 years in order to get your money back. And so, I think everybody when they first try it out does dumb shit like that. And I think when newbies come in and do dumb shit like that and they complain to the SEC or the CFTC or whoever's going to be in charge of this, that's where, some of the shit hits the fan. And so you'll see a lot of, not just know your customer and AML, but protect your customer against making stupid ass mistakes. But that's not a bad thing, right? Because I think you were alluding to it earlier that regulation can add some trust to it. And so it's not necessarily bad.
Because of those, sorry, Lech, after you.
Do you think as the Wild West elements start to smooth out, that we'll see real risks to the current banking ecosystem that, they'll start feeling the heat from, whether it's fintech or crypto native stuff, people offering better solutions?
Yeah, and I think fintech will feel the heat first.
Yeah.
And then banking, because fintech is, just like everybody's building layer 2 because Ethereum is too slow getting to 2.0. So everybody's just trying to take chunks out of it, right? And that's what fintech is. Fintech's taking out chunks from the banking system because they're too slow to do what's obvious to everybody else. And crypto will do the same thing to fintech because fintech showed where banking is slow. And yeah, there's more open banking coming and that's opening things up for some of the traditional banks. But crypto will do to fintech what fintech did to banking, and so as you simplify, because, at its base, DeFi allows anybody to be their own personal banker, right? Particularly with over collateralization, you're allowed to do almost anything in seconds and you just make your choices and you live with the results. And that's a good thing. And as that gets built up and simplified, just like fintech simplified banking applications, I think fintech is the first to take the hit because those are the most obvious applications. It's just like the early layer 2 stuff for Ethereum is what's getting hit now as there's better and better versions of layer 2 things.
Do you play on any of the ETH killers, like your Solana, your BSC, your Polkadot? Are you interested in any of them or you think ETH's going to figure it out?
No, I think ETH will figure it out for sure. But at the same time, there's specific value propositions for each of those blockchains. Whether it's Dapper with Flow trying to do what they do, whether it's crypto trying to do what they do, whether it's Zilliqa trying to do what they do. Obviously with Polkadot, they're trying to be like a verticalized, roll your own type. And I don't know some of the others as well, but I'm still digging in. But it's a zero-sum game, not maybe zero-sum game, but there's going to be a lot of losers.
Do you think there's Netscape risks for Ethereum?
Yes. No, not for Ethereum. I think for some of the others.
Okay.
I think Ethereum is good just because there's so many developers and they know what the problem is. And it's not like an organization where you say, we're making so much motherfucking money, let them come at us, because that's just not how it works, right? I mean, the more they do that's better for it, the better they do for the community, the more everybody makes. So there's no reason to keep on doing things the way they've always been done. The only issue is trying to overcome, going from proof of work to proof of stake, and what comes with that. And that's a major move. And once you do that, all bets are off. And so, all these alternative blockchains have got to get there fast enough to build momentum. And, Dapper's done a great job of it with Flow. But if you look across the others, there's a lot of developers. Most of them are getting paid by the blockchain itself, right, to do that development. But there's not a lot of action yet. So you see them all jumping on NFTs and paying all the artists and creators and everybody else to come and use their blockchain, because those treasuries are holding a lot of coin and they got to use it for something, because they know if they don't get momentum, they're fucked.
I'd love to chat a bit about NFTs, because in crypto, NFTs have been a little bit controversial. I think a lot of people don't seem to get it. A bunch of people seem to love them. And we were chatting just before we started, and you said something which I really like, which is, I don't buy stuff to speculate on it. I just buy stuff because I like it. I think it's cool.
Yeah.
I think that's probably the best way to approach NFTs. And I think Ledger just pulled up your lazy profile. So the vegan punk there.
Let's show your bags.
Yeah,
got it.
the vegan punk is the best. I'm super. I love vegan punks. I own so many of those. But could you tell us a little bit about what lazy is and how you've approached NFTs in general?
So, like I just said, I buy things that I like. And I like to go on mintable.app, because that's where it's mostly gasless. It's really simple to use. And there's a lot of undiscovered, really creative people. So I'll go on there, and it's crazy because it'll cost, the equivalent of $25 for the NFT. And then you got to pay $60 in your gas fees, but it's still worth it, because, to me, the same quality work on Rarible or OpenSea and other places is going to be much, much more. Particularly on, Nifty Gateway and some of the higher end places. And so then, I'll buy them because I think they're cool. And I wanted a way to show them. There really was no easy way to show them. You could go on Rarible and you can use their rarible.com / your address / 50 other characters. But that wasn't very convenient, particularly to somebody who wasn't very literate on it. And so I was like, you know what? I'm going to design something that's really, really simple and easy. I already own the lazy.com URL. And so I'm like, let's just make it, the lazy way to present your own NFT gallery. And that's exactly what we did. So I had one of my guys on our staff, Jesse, do the outline and do some of the basic coding. And I went through and made some adjustments with them. And it's only been 12 days, I think, since we released the very first version. And as of last night, we'd had 135,000 users and like 25,000 registered users. And all because it's simple. So now you just have lazy.com /mcuban, and I have it in my LinkedIn profile, my Instagram profile, my Twitter profile. If I want to show my mom what an NFT is and what I bought, I just email her the link, and my mom just has to click on the link and she can see it. If somebody gets real curious, and there's a couple things that I have for sale, like in my bag there, it'll say this one's for sale. I think one of the exploding liquor bottles. I think it's the exploding champagne bottle. Yeah. Offered sale after I bought it, because I just thought those were fun. Because that's kind of like in my head feels when I drink either of those two things. But, but at the same time, then you can click through to OpenSea, and then you can actually buy it, and we'll make a little money off of it, and we'll continue to simplify it. But we're not a social network. All the other places, Foundation, etc., Showtime, they're trying to be social networks that are Instagram-like. We're not that at all. This is your own personal art gallery or collectibles gallery, depending on what you have. You can pin the stuff that's really cool if you've got a lot of them, and just show it off. And it's really easy for you to tweet it, to share it on social media, to share it on Instagram, to share it on WhatsApp or Telegram. We just really, really made it simple. And that's going to be the whole thing. Connect your wallet and away you go.
So it seems like both DeFi and NFTs have found product market fit, but DeFi is confusing. It's finance. It's, talking about yield and stuff. NFTs, like, people just hit the ground running, and very quickly it's exploded. And, SNL carried a skit all about NFTs last week. It was super good.
Right.
And I mean, what's your perception of that? Like, you're around athletes and celebrities, people that are like looking for the next thing. Like, what's been your view of how these things are being perceived? Is it complicated, or is it just instant excitement?
So there's two pieces. Like anybody else, athletes, whoever, celebrities, when they see somebody making $69 million, yeah, and like a dude named Beeple, and they're like, who the fuck is that? And I know Mike, and he's a great dude, right? I've gotten to know him some as all this stuff has happened. And it's just like, what the fuck is that? And then they see Grimes, and it's just like Grimes, and then Blau, and just like, if, these are talented people, but if they're making millions like that, shit, what, how much money can I make? And then I show them what I did, where I just, took a GIF of me walking in the arena, and next thing I know, the shit's selling for $20,000, and I'm getting royalties.
Now, Luca's like, how can I get in on this?
Yeah, now Luca's spending time with him, trying to educate him on it. And so, but they all want to know. And we literally just had a conversation with the NBA about what we're allowed to do and what we're not allowed to do because of licensing and everything. But yeah, so just the headline numbers make it really interesting. And, and it's because it's hard for people to understand why people are speculating the way they are, that it creates the intrigue, but also the uncertainty. Because it's not like, oh, it makes sense, this is a Picasso, or this is a, Damon Hirst, or this is some amazing artist that has a following already. And it's not like Beeple isn't great and amazing with his everyday stuff, but $69 million is $69 million. And so trying to understand why somebody would do that, then you try to explain to them, well, they kind of put it in this fund where they're selling it, and they issue tokens against the fund. And by paying $69 million for this, it increased the value of the fund, which isn't really a fund, but it's like a token launch that, now it's worth $340 million or whatever it is. That's complicated, and that's why they don't fully understand it. And that's what makes the market kind of bifurcated between the speculators and everybody else.
How much do you see this sort of group investing? Like, the Wall Street Bets social sharing of information thing was super, super, super big. At the same time that there's a lot of crypto DAOs happening and using crypto for consensus decision making. Do you think this is going to get more and more popular, and you're going to see a Wall Street Bet type DAO product in the future? Yeah,
I've already been pitched, and I talked about that when I did an AMA. It makes perfect sense, right? And I've been pitched multiple of them, a Wall Street Bets, WSB type DAO, where it's community decision making. The problem is, how do you allocate power within the community? Because typically it comes from who owns the most, right? He who has the most gold rules, the golden rule. And that's the antithesis of what you want to see in a DAO with community principles. And so that's the catch-22 on those things as you really dig in. Because I could come in, or somebody wealthier than me could come in, and buy it up, and then just have everybody do what I want them to do. And that's the same thing. That's the same problem that happens in games. I think Axie is incredible. I think Megalopolis, I played that some. That's fun, right? I haven't played Decentraland or gone on there yet, but the people who got the land first and are saying, I got in early and now my shit's valued billions of dollars, they're the ones that have the most say. And it's harder for the newbies to come in and have as much impact. And it's not that you can't fix that. Like Axie has got some great ideas, and they're working through that so that anybody around the world can come in and make some money, and it's legit. But you've got to figure out that balance and how to make it so the community can have an impact. And that's the hard part.
I just recognize the time as well. I reckon you've got to jump in a second, haven't you?
Yeah. I can push this guy back. Okay, 5 more minutes. This is fun.
Let me. Somebody, if somebody has not made it, right, and they're like, I want to be Mark Cuban. I'm 18. I'm 22. Young person trying to figure their way in the world, and they get early to something and they get conviction. How do you recommend someone should actually, go about carrying on with their conviction to like take it through to where it's meaningful? Enhancement for their life from a monetary perspective, or, business creation, whatever?
So first of all, there's a couple things. One, you have to be exceedingly handsome like I am. And that's the first.
Sorry, Ledger.
I'm screwed.
first you got to figure out what's your definition of success. Because when you're 18 particularly, you're not going to know what the fuck you're going to be when you grow up. And even if you're really motivated to start a business like I was when I was a kid, I didn't know what I was good at. You got to find something. No matter what age you are, you got to figure out what you're good at. And once you know what you're good at, then you got to bust your ass harder than anybody to be great at it. And then when you're great at something, it becomes easier to monetize it. And when you're really good and you're monetizing, nobody quits, right? Because then you get really fired up and you can make things happen. But you've got to find something you're good at. And, if it's DeFi and you're into crypto and you just really want to try to make money, then, DeFi, the thing about technology in the crypto space, particularly right now, is that it's changing 100 miles an hour every second of every day. There's something new every second. Every single person in the industry is freaked out because so many things are happening so fast. 6 months ago, you could feel confident you knew what was going on. Today, you can't. There's no way that you're going to read all the white papers or light papers and figure out how people are competing with each other. That's an opportunity for everybody. If you outwork me, if you outwork you guys, if you outwork anybody in the industry, you're going to have a place. If you're willing to teach yourself some programming and take some Solidity classes or cadence classes, if you're into flow or whatever it may be, you're going to have a place in this. And it's, within a year or two, if you get good at that stuff and you bust your ass at it, you're gonna have a way to make some money. And you saw people who didn't have programming or technical backgrounds get into crypto, love it and live it and learn it. And that's what gave them the edge and the ability to participate. And look, I had to do the same thing. I had a background in tech, and so it wasn't hard to figure out. But just now, just trying to keep up, optimism and what is it, ZK, trying to figure out, exactly how that cryptography works so you understand it. Immutable, what makes immutable different from optimism, and why is ZK, better?
If you can pick the winner on something like that.
It's hard, right? And so what you're seeing is the big players, it's just pray and spray. Everybody's investing in everything. And as long as you put it on my blockchain, I'll give you more. And even if it's on other blockchains, as long as they think they can bridge it, then okay. And then even bridging, right? Let me lock it on Ethereum and I'll do a roll up so that I can just hold it so I don't, have to pay the Ethereum fees until they go down, et cetera, et cetera, et cetera. It's just getting exceedingly complicated, which is why I think Ethereum has a great shot of staying the winner, because all these moving pieces as all these blockchains compete just complicates everything to no end. Whereas if the minute that Ethereum moves to proof of stake, everything, just think how easy everything gets.
Yeah. The scalability is going to increase a lot.
Yeah. So now, if the tally's correct and the TPS goes way up and the environmental impact certainly goes way down in proof of stake and it all works and the miners don't go out there and, disable everything before it converts, then all this becomes very, very mute. And, maybe ZK is better at doing A, B, and C, but then they just apply it to Ethereum and it goes from there. So it's for anybody, I don't care if you're 16 or 66, has a chance to be really good at crypto if you just bust your ass to learn this shit and outwork everybody.
Yeah, what I also like about it is that you don't have to be right like 100 times or even like 20 times. You only need to be right like once or twice and have conviction in that bet, and then you're set, like you're on your path.
Well, but that's changing though, because if you were into anything 6 months ago, right? If you had any conviction to anything 6 months ago and you spent $1,000,
yeah, it could have literally been anything.
Yeah, you could have bought anything. Right? You could have bought anything and you're fucking rich now. Things are going up 100, 1,000%, 5,000% over the last 6 months. And that's why it's hard to hire people in the crypto space, particularly programs. Everybody's rich, they got it right, or they feel rich. But it's more difficult now because it's almost, we're seeing some of the ICO madness where there's a token for everything right now. And then there's a liquidity play for, a new DeFi opportunity or application or DApp every minute of every day. And so, even if you have conviction, 6 months ago, I would agree with you 100%. Right. And I wish I would have dove in a lot more. I was just watching. And 3 months ago, even the things I bought then are 3X, 5X, 10X, what they were. But I don't know. One argument says there's going to be enough new people coming in that most of these tokens are going to keep on going up. I'm a little more cynical. I think it's going to, there's going to be some that fail.
Yeah, I think a lot of stuff is now value is super, super inflated. But I think if you find things early, you find stuff like, if you're right about the Arbitrum versus optimism, whatever, or you find something pretty early and hold that same conviction, valuations change really, really, really quickly. Ledger, I see you've got the Shark Tank.
So my family are big fans of Shark Tank. Fridays at 8 Eastern, 7 Central. Mark, do you think we're going to see some crypto startups on Shark Tank?
Wait, Ledger, I didn't hear you. Would you say that again?
I said my family are big fans.
No. I mean the Friday nights.
Oh, it's Friday nights on ABC, 8 o'clock Eastern, 7 Central. Check it out.
We are going to see crypto on there for sure. I'm trying to push them on it because it is important within the business world. It's going to change the business world, and not introducing crypto into Shark Tank is like not talking about the internet. If Shark Tank was around in 1995, it would have been ridiculous.
You can call it Whale Tank, mate.
Whale Tank.
Free alpha for you.
No, you're all wrong. Down here is the guppies. Then there's the whales. Then there's the sharks.
Awesome.
Thank you so much for chatting, Mark. Thanks for coming on. You're invited to the Kobe pool party in Miami in Bitcoin June, Miami. If you wanna pop one down.
Let's go.
Thanks so much for coming on. Thanks everyone for watching. Ledger, any parting thoughts?
Don't get wrecked, I guess. I don't know. You're all going to make it. Mark, thanks so much for being with us. It's been a blast. Yep. I'm going to put you two guys on mute. You can close it off on the call. I'm going to hit it to the music. Off we go. Thanks, Mark. Really appreciate it.
Thanks, guys. Appreciate it, guys.
Go to uponly.tv/Blockfolio. Trade on Blockfolio today. Thanks to Mark Cuban for being on the show. Thanks to y'all for being here with us. You need to share this episode. We need you to take it, put it on the internet. Appreciate you being here with us. Don't forget, uponly.tv, and then go to uponly.tv/Blockfolio for more. Kobe and I are going to come back. How about that? In a few minutes for some extra streaming. I just told him that. He doesn't actually know that he's doing that. But we'll see you soon. Thanks for being with us. Catch you next time.